so overwhelming. Come over here and overwhelm me. You write checks that my ass can't cash. I've been a little.
Hey babe, so I'm back, and I'm back with 4 steps to help you prepare to do your taxes as a stripper. I feel like I messed up on the last one too, but you know, we're rolling with it. So the first step to preparing to do your taxes as a stripper is to establish your yearly income. To establish your yearly income, you basically want to like keep track of your income for at least 3 months and then find the average between those months. You add up and then, well, you add up those months and then divide them by 3. Well, if you do 3 months, if you do more, then add up however many months you use and then divide it by that amount. And then times that amount by 12, and that'll be your estimated yearly earnings. So once you establish, well, step 2 is once you establish your estimated yearly earnings, you want to decide how much of those earnings you actually want to put on the books. So let's say, let's do like a practice equation. So at most, let's say you want to put $50,000 because you need at least $50,000 on the books to get that mortgage loan. So $50,000 a year, you would literally have to deposit at least $1,050 into your account weekly to have proof of that income. Putting you at $50,000 a year, if you're a head of household, that'll put you about in the 15% bracket. Depending on if you're a head of household, if you claim any dependents, that could change up to like can take you up to the 25%. And if you're claiming lower than $50,000, then it can take you down to the 10%. So you're going to be between the 10% and 25% tax bracket. And with the $50,000 a year, so let's just use that as our basic example throughout this video. If you use that as your yearly income, depositing the $1,050 a week into your account, your estimated taxes would be about $7,500. I wrote everything down, that's why I keep looking down, but it would be $7,500 for your taxes. And knowing that ahead of time, estimating that amount ahead of time is a huge help. So definitely step 2, don't skip that just to not like worry about it. Definitely like figure out how much you want to put on the books so it helps you figure out how much you're actually going to be paying in taxes. So step 3, you basically want to figure out how you want to do your taxes. I don't know how it works, so basically all these tips are for USA, like the US. I don't know how it works for other countries, but you basically can do your taxes like 2 of which ways. And one is just wait until the end of the year and just do like a large sum. So in the $50,000 example, that would be the $7,500 you would have to pay at the end of the year. And there's another option, which is doing it 4 payments quarterly, so that's every 3 months. And that would be with the $50,000 example. That would be $1,825. Sorry, I'm like confusing my hundreds and thousands. So $1,825,000. And then if you want to even break that down further to save up, that'll be $625 a month. Regardless if you want to do it in one large payment or in the 4 payments, you would have to, I would save up monthly payments just to not have to worry about it in like one last week payment or something. So yes, basically you want to just figure out whether or not you want to do the 1 large payment or the 4 payments. That would be step 3. Nice and easy. It's just figuring out what setup would better suit your finances and how you make your money. Well, you're making it stripping, but how you handle your money. Because waiting till the end of the year, that will literally leave me in a position where I just want to wait until the last week and try to come up with all that money. Doing it quarterly kind of helps me hold myself accountable throughout the year instead of holding it off to the end of the year. So I definitely like to do the 4 payments, and it makes it seem a lot smaller doing the 1825 instead of just the 7,500 all at once. Step 4, you want to keep receipts for all tax deductible expenses, and you want to keep receipts for any sort of cash deposits into your bank, or any sort of earnings into your bank that you make from the club. You want to keep proof of those in a accordion folder, and you want to be keeping track and writing everything down inside a notebook, an organizer, anything like that. But you want to be keeping track of your finances to the T, exactly like what's coming in. And with that, that's not exactly what, like, that's why I say in step 2, separate what you're making and what you want to put on the books, because those should be 2 totally different numbers, because as a dancer we do have the freedom to report what we want to the government, but you just have to make sure that your earnings are keeping up with your spending. Like, you don't, like I said in my previous video, you don't have, it will create a paper trail that your taxes can keep up with, or your income can keep up with. So make sure that your income keeps up with everything else in your life. Okay, so lastly, some of the basic deductions that you can do for tax deductions as a stripper are child care, your lingerie, your stripper shoes, pole dance classes, and any sort of like financial advice you seek out that you have to pay for. Those are the basic ones. Do cosmetics. Cosmetics, it just depends what they consider stage makeup. You would have to talk to an accountant specifically on like what would qualify, or just go with it. And if they audit you, like literally just as long as you have the receipts, they really can't fight you on whether you use it or not for like work, because you do. Like bigger ones that play a bigger factor are your health insurance. If you don't have another job, so when I worked at CHEK, I was provided with health insurance from there, so I couldn't use that as a tax deduction for stripping, because they paid like a percentage of it, so it just wouldn't have worked out. If you're in a situation where you have another job and you and they provide you with health insurance, then you really don't qualify for that deduction. And if you live with your parents, like what cut me off, my income at CHEK cut me off from having my health insurance through my mom. But if you still have health insurance through your parents and you're not paying it, then that doesn't count as well. Another one would be, and the last one would be, invest in your like overall life plans. Because I had a 401k plan through CHEK, I transferred that into an IRA. Doing that, you could either start an IRA, or a solo 401k. Doing both of those like lowers your tax bracket. It's like considered a tax deduction. I don't know how it works out, but even though you're putting in contributions towards your 401k or your IRA, so money is going towards that. Yeah, it's like another bill basically. It's going towards your future. You're getting that back in the long run. And not only it's knocking you down a tax bracket, so you have to pay less taxes at the end of the year. So those are the simplest to the majorest tax deductions that you can do as a stripper. But other than that, I will literally do like the $50,000 example and all like the math I've done in the description box below, along with like helpful links. And I will link the previous on why you should do your taxes as a stripper. If you didn't see that and you're just bumping into this one and you're still iffy about whether or not you should do it, I will link that. But other than that, thank you guys for watching. Please like, comment, and subscribe. Bye, guys.